Okay, Assalamualaikum. We continue with classification of costs. So the cost can be classified by many ways. Okay, we group the cost, okay, according to their common characteristics, which is known as cost classification. So cost classification is very important for the firms in order to control the cost. So there are many ways to classify. Okay, the first classification is by nature. We can classify the cost by nature. So the nature of cost which are material, labor or overheads. Okay, so material is the basic substance of producing the finished goods. So the labor and the overheads, which is known as conversion cost, okay, will convert this raw material into finished goods. So raw materials is a basic substance converted by labor and overheads to be a finished goods. So this is nature. We classify according to material, labor and overheads. Okay. The second classification is relation to the products. Okay, relation to the product, that means we refer to the how closely they are related to the cost unit. Okay, how closely they are related to the cost unit. So we have direct costs, we have indirect costs. Okay, what is direct cost? That means the costs which are directly related to the product. So if we have material just now, so direct material will be direct cost. Okay, example in producing the books. Okay, in producing the books. Okay, the material, okay, is direct material will be papers. Okay, material, papers, ink, okay, glue. So these are all the materials. So when they are related directly to the product, that means you can identify the amount of material. So this is called direct material. Okay, so one book, okay, you need one ream of paper. So one ream is 10 ringgit. So if you have two books, that means two ream of papers, that means 20 ringgit. So you can trace directly. Okay, ink. Okay, one bottles of ink is about 5 ringgit. So one book, one bottle. So one book is 5 ringgit of ink. So two books is 10 ringgit. So you can trace directly. Okay, so how about glue? Glue is also material, but you cannot trace directly because the value is very small. Okay, in one bottles of glue, let's say 10 ringgit, so can be used for many books. Okay, it's about let's say 1,000 of books. Okay, so the value for one book, the glue of value of glue for one book is quite small. So that means this is considered as indirect material. It involved in the production, but indirectly because the amount is too small, insignificant value. So it's under indirect material. Okay, so other things under direct cost is direct labor. Okay, direct labor to produce the books, you need the workers that print. So these workers are traced directly to produce the book. So that's why we call it direct labor. But however, there are also supervisor. Supervisor is not directly producing the book. So this is involved with supervise the worker. So the worker who print the books is direct labor because directly traceable related to the product. Supervisor do not produce, do not print the books, but they supervise the workers. So wages for or salary for supervisor is indirect labor. Okay. And then how about direct expenses? Okay, direct expenses in producing the books. Okay, you need to pay royalty. Okay, to the authors. So royalty involved directly in producing the book. Okay, if there is no author, there is no books produced. Okay, so the royalty that you pay to the to the author will be direct expense. Okay, however, in producing the books, you need other expenses such as electricity for the machine printing, okay, rental of factory. Okay, so these all expenses are not directly traceable to the product, so we call it indirect costs. So all direct costs, direct material, direct labor, direct expense, also known as prime costs. While all indirect costs, indirect material, indirect labor, and indirect expenses known as overheads. So this is the second classifications of the cost relation to the product, or sometimes we call it traceability. Okay, some of the books say traceability. Okay, we classify based on traceability. Okay, so this is number 2. Next one, by function. Okay, we can classify the cost by function. Okay, so there is normally we can classify to two main categories. Okay, production or manufacturing, or non-production. Okay, production and non-production. So under production, okay, so sometimes we call it manufacturing cost, sometimes we call it factory cost. Okay, under production, okay, the cost incurred from time of acquisitions of material until it is kept in the store. That means during production of the product. Normally it incurs at the factory. Example, raw materials, labor, royalty that use. Okay, that is the cost in the factory in order to produce the product. Okay, while non-manufacturing we can consider other than production, so such as selling. Okay, so selling is non-production. Okay, the cost incurred in the process to sell the product. Example, salesman salary, advertising. Okay, and then distribution cost is also non-manufacturing. Okay, after you sell, you have to distribute to your customers. Okay, distribution costs incurred in the process of distribute the product to the customers. Example, traveling expenses, depreciation of delivery van, so it's under depreciation, under distribution costs. And then we have also non-manufacturing is administration costs. So this administration incurred in general administrative, including directing and controlling. Okay, such as clerk salary, office rent, audit fees. So that means all the costs that not included in the manufacturing. This is at the office cost. Okay. Okay, finish about functions. Okay, now we move to, okay, besides the functions, the four functions, other functions that may classify, that we may classify, okay, is finance. Okay, finance costs. Okay, example, financing activities, interest paid. Okay, and then by finance, and then R&D costs. R&D. Okay, so R&D example, cost of laboratory. Okay, cost of trial runs. Okay, cost of feasibility studies. Okay, feasibility studies. Okay, cost of lab. Okay, in order to develop a new product. Okay, under R&D cost. Okay, the fourth classification is by controllability. Okay, controllability is a cost that we classify according to whether the cost can be influenced by the management or whether they are determined by factors outside the business. Okay, by outside of the business. Okay, if controllable cost means that the cost which the management could control. That means the cost center manager can control the cost. Example, training costs can be controlled by human resource department, human resource manager. So he can control in terms of how many training to give to the employee, okay, for the period, how many cost of training, okay, how many times, how many hours of training for the employee. So this cost can be controlled by human resource manager. Advertising can be controlled by sales manager. So they can decide whether to advertise in electronic media, in newspaper, or for how many hours, for how many period to advertise. Okay, so they can control the cost of advertising. So this is control because that means the management has influence or has control in terms of cost internally. Okay, uncontrollable cost which can't be controlled by management. Okay, this is normally controlled by outside. Okay, control by outside. Okay, so what is the examples of control by outside? Example here is um, price of material. Okay, price of material cannot be controlled by internal management. Okay, this is controlled by the market or by the supplier. Okay, rental of premises. Okay, rental of premises controlled by landlord. Okay, you as a tenant cannot control the rental rate. Okay, so this is controlled by outside. Okay, how about electricity? Okay, the electricity tariff is uncontrollable. Okay, how much per kilowatt, okay, is uncontrollable, but the usage of electricity can be controlled. Okay, electricity usage, okay, electricity usage can be controlled internally. So how many hours you want to switch on your light, switch on your aircon, so can be controlled. The usage can be controlled, but the tariff cannot be controlled. Same goes to the material. Price is uncontrollable. Usage of material can be controlled. How many units of material to be used, okay, can be controlled. So this is controllability classification. Okay, the next one will be normality. Okay, normality. Okay, the cost can be classified according to the normal cost and abnormal cost. Normal cost, that means costs that have been planned for. That means you know the cost were incurred. Okay, as example is evaporation. If your production is to produce drinks. Okay, when you produce drinks, okay, there is a process where you boil your ingredients with the waters. Okay, boiling process. So during boiling process, when you boil 1 liter of the water, okay, at the end of boiling, okay, you get less than 1 liter. Okay, less than 1 liter, let's say it's only 800 ml. So that means they have 200 ml evaporation. So this process, okay, is expected. So you plan for, you know that will be lower than input. Input 1 liter, output is only 800 ml. Okay, so this is normal cost. Okay, the cost that you plan for, you know, expected to be happen. Okay, abnormal cost is the cost that have not been planned for, not expected to be happen, such as stock destroyed in a fire, flood, fire. So there are damage of material in the store. So that one will be abnormal cost. Okay, number 6 is period cost and product cost. Okay, period cost and product cost. Okay, the first one is product cost. That means cost that could be identified with goods produced or purchased for resale. So this cost that could be identified with the goods purchased or produced for resale. Example is, okay, when you produce the books, that means you can identify the cost of producing the book. That means identify the cost of raw material, papers, inks. Okay, so the direct material will be product cost. Whereas for the period cost, the costs which are not included in stock valuation purposes. Example is rent of office. Okay, you pay per month. How much the cost of rental office per month? Insurance paid for the machine per month. Okay, so that's why the cost we call it period cost. You pay for by period. So this will be not included in stock valuation. So if we refer back to the financial statement, it's not included in the cost of goods sold. So this is period cost and product cost. Okay, then we move to behavior. So behavior is the costs that are classified according to how they behave regarding the level of activity. So there are four types of cost behavior. That means the cost behave when there are changes in level of activity. Okay, the first one is fixed cost. So what is fixed cost? The cost that remain unchanged over a wide range of activity. Example, rent, depreciation, insurance. Okay, let's say we refer to this example. Okay, example to this example, let's say this is fixed cost per month. So per month means we give example here rental of premises. So or factory. So if the first period, the first month you produce 1,000, you still have to pay rental 3,500. If you produce 2,500 also, you have to pay rental 3,500. So at any levels of activity, increase or decrease, the cost is remain constant. Okay, remain constant. So that's why we call it here remain unchanged over a wide range of activity. So the activity increase or decrease, the fixed cost will be, the total fixed cost will be same. This is total fixed cost. How about fixed cost per unit? Okay, to get fixed cost per unit is the total fixed cost divided by levels of activity. So 3,005 divided by 1,000, so you get 3,003 cents per unit. Okay, 2005 units, so you get per unit is 1 ringgit and 40 cents. 3,000 divided by 3,000, you get 1 ringgit and 17 cents per unit. And if you produce 5,000 units, so the fixed cost per unit is 70 cents. Okay, total fixed cost divided by levels of activity. So you can see here, if your levels of activity increase, total fixed cost remain unchanged, but the fixed cost per unit keep decreasing. Okay, so if we refer to the graph, okay, so we can see that here, okay, based on the example above, figure 1 is the total fixed cost graph. So if you refer here, how much is the total fixed cost? 3,500 ringgit, even though your levels of activity keep increasing from 1,000 to 5,000, the total fixed cost is remain 3,500. Okay, here. Okay, even though it's 1,000 until 5,000. So if we see here, okay, there are dotted line here. So this fixed cost remain until a certain relevant range only. Okay, until a certain relevant range. Okay, let's say we put here 5,000 is the relevant range. If the company produce more than 5,000, okay, if they produce more than 5,000, let's say 6,000, okay, so the factory or the premises is not big enough to produce 6,000, so they have to rent the bigger space, so the bigger factory. So of course the rental will increase immediately. Let's say the rental increase to the bigger space is 5,000. So that's why it's only remain unchanged until a certain relevant range. Okay, so now if we refer to the fixed cost per unit, okay, keep decreasing. If your level activity increase, the fixed cost keep decreasing. So it start from here, okay, and then it keeps decreasing when the levels of activity increase. So level activity increase per unit fixed cost keep decreasing. So this is in figure 2. But this line cannot intersect with x-axis here, not intersect with y-axis, because it can't be zero, cannot be zero fixed cost per unit, even though the quantity keep increasing. Level activity keep increasing per unit cannot be zero. Okay, so this is the fixed cost. Okay, the second under cost behavior is variable cost. So what is variable cost? The cost tend to vary in direct proportion to the changes in the levels of activity. Example is raw material, direct labor. Okay, so example, here raw material. Just now we give the examples of books. Okay, papers is the raw material. So one book you need 1 ream of paper. The cost of paper is 10 ringgit. So if you have 2 books, okay, the cost of paper 2 reams will be 20 ringgit. So if we refer to here, okay, example, levels of activity 1000, total variable cost is 1005. Okay, if we have level activity keep increasing, the total variable cost also keep increasing. And then this is variable cost per unit. So to get variable cost per unit, total divided by unit. So 1005 divided by 1000, you get 1 ringgit and 50 cents. Here is 1 ringgit and 50 cents, 1 ringgit and 50 cents, 1 ringgit and 50 cents. So that's why we call it here vary in direct proportion. It keep increasing, okay? Keep increasing at the same rate. Here is rate the same rate 3 Rm30. So increasing the same rate. So here increasing the same rate. Okay, 1 unit is 1 ringgit and 50 cents. So that's why we call it change in direct proportion. Vary in direct proportion. So how about the graph? So if we refer to the graph, okay, the y-axis as usual is the cost, x-axis is the level activity. So the total variable cost here keep increasing when your level activity keep increasing. So the graph should start from zero, start from origin, because if you do not produce any product, okay, level activity is zero, you do not need any variable cost. So that means if you do not produce books, you do not have to spend for papers. So the cost of papers will be zero. So it start from origin and then keep increasing in straight line. So this is the total variable cost line. Okay, total variable cost. Okay, how about your unit variable cost? Okay, the same amount. Okay, so the same amount. So every levels of activity cost per unit should be 1 ringgit and 50 cents from the above example. So the same. So it's straight line, horizontal. Okay. So this is variable cost. Okay, figure 2. Okay, how about semi-variable cost? Okay, semi-variable cost here is the cost that vary but not in direct proportion to the volume of production, so to the levels of activity. So the cost that contain both fixed and variable cost. So the semi-variable cost consists of fixed cost plus variable cost, consists of these two. Okay, how about examples of semi-variable cost? We take telephone bill. So the telephone bill here is actually for fixed line bills. Okay, fixed line telephone, not the mobile phone yang you ada tu, not the not the top up prepaid and so on. So this is fixed line telephone at home. So they have a rental for fixed line, and then they also usage cost, rental cost, they have usage cost. Let's say if you do not use the telephone, you still have to pay the rental cost per month. How much? Let's say rental cost is RM 30 ringgit. Okay, so when you draw the graph, okay, so here rental, okay, for telephone, fixed line telephone, fixed fixed line telephone. You have rental, you have usage. Okay, rental, let's say 30 ringgit per month. Okay, this one is based on usage. So if your levels of activity is increasing, you still have to pay the rental 30 ringgit. So if you do not use the telephone, you still have to pay 30 ringgit per month. But sometimes when you use the telephone, that means in terms of usage, if your usage is more, okay, the cost will increase. Okay, so this is variable cost. So if you start using the telephone, level activity increases, so the cost of the variable, the telephone bill would be increased. So it's combination. This is fixed cost, this is variable cost. So this line is semi-variable cost that consists of variable and fixed line. Okay, fixed cost here. So this is semi-variable cost. Okay, the last one is step cost. So what is step cost? Okay, step costs are fixed over a range of activity. Okay, and then rises, okay, fixed over range activity, and then rises to a new level as activity change. Example is supervisor salary. Actually, step costs come from fixed cost, but it rise immediately in a short duration, short period. Okay, short levels of activity immediately increase. Okay, supervisor salary. Okay, example. Okay, example here. Okay, in the factory, let's say we have a worker. So one worker can produce 10 units of output. 10 units of output. Okay, you have a supervisor to supervise the worker. So one supervisor can monitor or supervise 10 workers. Okay, so one supervisor, the wages is RM, the salary for supervisor RM 1,000 per month. Okay, one supervisor 1,000 per month. Okay, let's say if the company do not produce anything, okay, so that means the quantity is zero until 100 units. So 100 units, so one unit, 10 units, one worker. So 100 units is how many workers? 10 workers. Okay, to produce 100 units, 0 to 100, okay, you need 10 workers, the maximum for 100. So 10 workers, you need one supervisor. So one supervisor, how much the salary that you have to pay? So you have to pay for one supervisor, the salary is 1,000. But if the company want to produce more than 100, okay, start from 101 until 200 units. Okay, so 101, you need to hire another supervisor because one supervisor can supervise only 10 workers. 10 workers only produce 10 units. So 10 workers can produce 10 times 10 is 100. So if more than 100, you need more workers. So you need 11 workers. So 11 workers, 101. So the supervisor will be 2. Okay, supervisor will be 2. Up to 200, you need 20 workers. Okay, 2 supervisors, so the salary for supervisor is 2,000. So from 201, it will be 3 supervisors. So 3 supervisors will be 3,000. So now the cost here is the cost of supervisor salary. Okay, so 0 to 100. Okay, you need to pay supervisor salary 1,000 ringgit. Cost of supervisor salary is 1,000. So if you produce more than 100, you need 2 supervisors, okay, up to 200 unit. Okay, so the salary will be 2,000. So here is 2,000. So if you have more than 200, you need to hire another supervisor. So immediately it will increase to 3,000. So this is how the graph is built. So that's why we call it step cost, because the graph is just like a step. Okay, so immediately rise when there is changes or increase in levels of activity. So this is step cost.